7:13 a.m. Eastern Time on a Wednesday, September 13th. Looking at Oracle, and I actually find it really weird here because literally it came back down. If you're actually looking at this, I'm looking at this at a 1 hour. Let's look at a 5 minute. It literally came down exactly to where we had talked about it having support, which is around 107, right? It found support at around 107.33. We talked about that high volume node down there yesterday, and it did bounce. It's trading at 109 today. So I did do the day trade yesterday for Oracle. I did sell the 120 puts, and I got stopped out. It did not work. It didn't work. I'll continue to go down. I sold the puts around when the underlying was near 1260 or so, 1260, 1270. It actually went into profit for a brief moment for probably about half hour or so, but it quickly dissipated. I had a 50-cent stop on my order, so I actually didn't care. I ended up losing, I think, $170. It's like 170 or 180, but it didn't work. It didn't bounce. So, and here we are. And so now we're at the levels. And then when it did hit 107 yesterday, I had sold that 110 put out in October. I had mentioned that, hey, look, if you were looking for a swing trade. So I did do that. So now I'm the proud, I guess not even the owner, but I'm the proud seller of a 110 put out in October. And, as of today, it doesn't look bad if it continues to rally up here, back up to 110. So we'll see how it goes. And that was really all I did. I actually had a great day trading crude oil yesterday. I don't want to sit and talk about how I'd rather, you know me, if you've watched me for a long time, I'd rather talk about the stuff that I fucked up on than sit around and talk about, I had a good day in crude oil. Let's just put it that way. And really the good day was that level we had mentioned early on, I believe it was like the 88.90 level, which we put the mark on, which again, I had put in. And look, I will actually, this is what all the other jackasses do that do this and charge people for. Here it is right here. CL crossing 88.83. It was an R3. It was on 912 and fade on low momentum. And that's exactly what I did. And that is the alert. And you can see these are the alerts that get put in here. These are all the trades, right? These are all the trades. I put them all up here. I have nowhere to hide. I don't care whether they're good, bad, or indifferent because I take the trades. I'm not going to make a big deal about it. And there you have it. So there it is in plain sight. And that was the one I took, and it turned out to be a really nice trade. I didn't kill it from a point of view where I made a ton of money. It was a great trade because I literally took no heat. I literally think I took maybe about 4 or 5 ticks of heat for maybe, 20 seconds. And it immediately reversed, and I wrote it down for good. I think overall I did 3 contracts. I think I made $300 or $400 real quick, and that was it. And I was done. I was like, yeah, you know what? I'm good. And I did that one before the Oracle trade, so I was feeling really good. And that was it. So let's take a look, and then let's start off here, and let's look at some indexes. The indexes were an absolute chop house yesterday. They were a chop house. The price action was really bad. I believe it's probably has a lot to do with the fact that we had the contract roll, and so you're getting like this split volume, right? You're still getting traders trading Sept. You're still getting traders trading September, even though there's more volume out in December, but you're still getting split volume. And I think that just leads to a very choppy, sloppy market. And I think it's probably going to continue that way until the end of this week, until options expire. And then once we get the option expiry, I expect next week we'll kind of probably be back in full swing. But the thing that's going to probably consume everyone's news cycle today is the inflation rate coming out at 8:30, right? That is going to be the big number. I think that pretty much all traders are sitting on right now, waiting to see what kind of number is going to come out and what to expect. It pretty much been waiting about it all week. Everybody's been talking about it worse than the freaking hurricane that's out there in the middle of the ocean. It is what it is. So I mean, I'm obviously not going to do anything here, even pre-market. As enticing as S2 is here on the ES, that is really the thing that's going to kind of put a damper on most the trade this morning. Unless you're able to do something between now and 8 o'clock, usually I have a pretty, it's not really hard, fast rule, but I usually have a pretty stringent restraint order on myself during economic releases to try and not do anything at half an hour before the release and roughly a half an hour afterward, because I just want that business to get digested into the market and see how the market actually reacts before I go and jump in. I'm not some big swinging dick here who can actually want to kind of ride through those kind of bullshit moments, so I just rather stay on the sidelines. A lot of levels are still kind of intact from even earlier in the week, Monday. We still have this 45.45, which yet to be breached today. So I really believe that, now that it hasn't been breached, it's probably getting to be a very strong level. And who knows if those numbers come out, those employment number or the CPI numbers, inflation rate numbers come out, and they're, good. I don't even know what's good anymore. Honestly, I don't. I try not to pay, but I guess if they're good from what the market interprets them to be good, I don't know what I don't know what they're looking for. I have no idea. If they interpret it being good and the market rallies, quite possibly we breach that today and we get up to that R3. And again, look at R3 today. R3 is on that level that we highlighted back earlier in the week. I mean, it's funny how, look, I don't make this up. I just mark the numbers. And it's amazing how they continue to overlap on themselves. And the more they overlap on themselves, folks, and that's why it's important to watch them every day and watch these pivots, because the more they overlap and the more they coincide with these high volume and volume hole type of situations, the stronger they become. So, it's just very interesting. So we have those two levels up there, which it's 452, 45.52, which is an R3, right? And then also 45.45. And then if you want to go out on a limb, you could really say R2 today is probably not a bad trade because it is the swing high from yesterday, right? There is the swing high. Let's just zoom in so everybody can kind of see it. It is the swing high close to the swing high yesterday. So you kind of have this little bit of a range here, which could not be a bad spot for a possible counter trend trade. And it really is going to all come down to what numbers come out at 8:30, where this thing decides to go. And that's kind of really it on the ES. As far as today, because I already have, as I said, a number of levels that have already been kind of set. This number we had here all week, which is 44.95, well, actually from yesterday, still hasn't been breached. And this number here as well, 44.84. You look, they're very relatively close to existing pivots. So I'm going to keep an eye on those to the downside. There is a huge, and here we're in a small spot, right? We have this big gap in here in the volume profile this is from contract roll. So we need to kind of focus out a little bit to kind of see what kind of volume resides in there. There is volume in there. Again, it's just because of that contract roll, it looks light, and you see it all come into fruition here. There does seem to be a lot of sellers in here, so maybe they get tired in this spot. I always kind of like these spots. I always like these high volume node red areas for reversals because they usually are pretty good areas of where sellers will get exhausted, right? They'll kind of get tired out. And again, you may not get like a huge bounce. You're going to get what I consider a natural kind of bounce after a significant move down. So there you go. There's the ES. I really don't have anything else than that. I think if I actually go on, I'm going to be more of, just kind of wah. And then surprisingly, we have the ES and the NASDAQ both kind of off a little bit today, but the Russell's up 18 handles here early in the morning, roughly hovering right around R3. So very interesting price action on the Russell this morning. I don't know if I'd really take this, right? Usually once we breach this, it's kind of a rough area to short, in my opinion. Does look like if we're looking at the daily that there is probably some gravity back down to this point of control of 1857. So I'm going to go ahead and that's actually the pivot. So I'm actually going to create an alert for the Russell at 1857. And that to me looks like a pretty decent area for a possible long counter trade. Again, all hinging on the fact of these numbers coming out at 8:30. It's the pivot 09, 13, 20, 23. And that's kind of the story with that. I don't really see anything else in there. Russell's been kind of it's been a tough trade. I'm not going to lie. It's been a tough one. It's been very, very choppy. The trend overall in the Russell has been a little counter to the ES. And if we focus out, you will see that the Russell, again, has this, I'm going to keep talking about it, this pretty distinct pattern here. I'm waiting for this thing to touch back down here to this 1834 level, which I think is probably, can't be a better, I believe, buy spot for the Russell. Now, whether it sets up or not, I have no idea. We have these upwards levels here. This looks pretty interesting, 1907. I'm actually going to mark that. Reason for that is that's a high volume node at 1907. The reason I like that is it's not only a high volume node, but it's also a high volume node where there's a lot of negative sell pressure. There's also another one here at 1896 and another at 1885. So I'm going to go ahead and mark that one. I'm going to focus out a little bit. And I'm also going to mark, now you see this little teat sticking out there? Yep, the little teat. I'm going to actually mark that one. Again, this one's probably going to be a short trade, and that's 1865. Now, obviously, all bets are off the table if any of these get breached during those numbers. Because the numbers, pretty much negate anything that you're doing here. All right, this is a high volume node, and it's also a delta red, and I always like to put in red. So it's a high volume node. Actually, reverse it. It's a red high volume node, and that's on 09/13/2023. Now you can actually all do this again at home, and again, all you're looking for here is look, when I'm doing futures, I'm looking for that I'm looking for that exhaustion kind of pullback. And I'm not usually looking for much. I'm looking for 15, 20 ticks, usually about 15 ticks on trades like this. That's it. They're just quick hitters. And the reason I like these is because they are normally pretty high probability scalps. They're definitely not swing trades. So that is actually probably another spot. And then we still have this spot down here. Again, like as I said, 1834. And I think we're pretty well set up on the Russell. And then this band down here, which is going to be an area where I'm going to be looking to buy probably pretty hard down there. And that's it with the Russell. So there's all our alerts on the Russell. Again, a lot of stuff's been sitting there for a while. But that's usually what happens when we get into a market that's been pretty much all week. Hasn't really done much of it. It hasn't done direct, really. It has not done direct, nothing at all. All right, let's switch over into crude oil. As I mentioned yesterday, getting long crude oil is going to be tough. And the reason is I have really not, even yesterday, I was trying to even after I actually got to my level and it sold off, there really wasn't any spot yesterday that I felt like, yeah, here, I'll just put in the 5 minute. I wish I had tick charts on here I wish I had tick charts on TradingView, but they don't have them. It's no big deal. 5 minute is good enough. But there was really no level that even though I caught a pretty nice pullback, there was nothing that I could say, yeah, all right, I saw sellers get kind of tired there and saw a clear reversal, because even when it did reverse, it reversed in a chop house. Like it sat and it just chopped away and literally just kind of just gyrated. And I don't like those kind of trades. So I usually get the hell out of those. I want to see a clear reversal where it's going to bounce like you threw a rubber ball at a wall, right? And it just came right back. That's kind of the bounce momentum that I look for here. And just looking at the profile here on the 5 minute, it is pretty impressive that all you see it all the way up the chain here, and with small bands, it is pretty much delta. It is green. And so much so that even on the 1 hour, which is kind of my go-to chart here, it has been nothing but green. Like obviously there's some bands. Here's a band here of some red delta here. Here even today in today's trade, there's literally one little band around, maybe there's a reversal here at around 88.98. I'll focus in on that in a second. And then up and away here, we have to focus and drill out even further to kind of get anything of what's going on up top here. We have an R2 at about 90 or 89.80. We have an R3 at 90.64. All right, so, and then looking for, any downside, we had API numbers come out last night. I didn't look at them. They were obviously digested by the market as bullish because we're rallying today a bit. We're up about 57 cents. But we do have those inventory numbers coming out at 10:30 today. So I'll be watching those. So a couple levels for that. We do have a pretty nice level to the downside here. Not only does it correspond with a high volume node, it also corresponds with a pivot. Here's an S1. S1 is at 87.68. And you can see here we have a high volume node at 87.54. So pretty close. That's actually, to me, that's a pretty good setup. So I'm actually going to go ahead and set that alert. And that number is not out of the question simply because, it may seem far away at this point, But, crude oil can move pretty fast. If these numbers are not what the street was really looking for, we could really push down to those numbers pretty fast. So that's actually an S2. And it is 9/13/2023. And it's also a green high volume node. Okay, so just so we know all, the details of what the trade is. Okay, and that there is our alert on crude. Now I'm going to zoom in a little bit on the upside here. And I'm going to go out. I'm going to go to the 4 hour, and I'm actually going to zoom out to get some profile up at the top, because we have not seen a lot of these levels up here since, basically last year, late last year. Pretty much the same time this time last year in September. Here we are in September of last year. And we were just actually on our way down and trending down from over $100, where now we're actually now in the opposite side of the trade, where we're now trending up, right? Just crazy stuff. We did get that double top up here in September, October time, which is roughly at about 93.38. So I'm actually going to mark this now, because that number is not so crazy anymore. And so there's yet another spot. And all this is actually a double top from back in, it's from October 2022, which would make this a triple top, equaling a triple top. Again, it's all time frame too. It all sounds good. And we're doing this on, let's see, 09. This is when we did this, 13/2023. I mean, but what's nice about these alerts is you can put anything you want in here and have, and context, right? It's always about context. I actually need to put a 4 hour. I always like to know what time frame I'm actually looking at. So it's a 4 hour. It's a double top from back. We have it marked here, right? Which would make this a triple top. Or is it? I don't know. Triple top usually happens faster than that. So I don't even know. I don't even know if I should even put that in there. I don't even know if a triple top can actually span over a year from a year ago, right? That doesn't make sense. I don't know. I'm just pointing this stuff out. It looks like a good spot as any to possibly get short. Why not? And you see I have a bunch of other levels up here. The 91.65. We've already, this one's to the downside. That's pretty much it in crude. And then as you get up and away here, we're into no man's land. There's nothing up here, right? This is where your Fibonacci crap comes in. This is where if you really want to see some levels, you have the thing, which is nice here. They have the auto fib extension. So you can actually do that. And then that'll give you at least an idea of where some of the upside to this could possibly be. Just something to throw out there. Again, you notice I always have this turned off most of the time. The only time I actually even really turn these on and even look at them is when we are at highs and I don't have any, when we're at really, we're at short-term highs and I don't really have any profile up there to go by. I like to at least have some semblance of like, here's at least something mathematical I can throw up there to give me some idea of where there might be some, levels up there. I can't really tell you whether or not they work or not. Honestly, I don't think they do, but they make you feel a hell of a lot better. And then how many people out there doing a broadcast are going to tell you that? I mean, truthfully, they don't fucking do shit. They don't do anything but make you feel better. Like, oh yeah, there's a Fibonacci up there, man. I mean, it doesn't do you any good whether there's a Fibonacci up there unless every algo out there and every like prop firm, has that level mark too that they're all going to short from. And so it like kind of gives your trade some momentum then. But anyway, needless to say, that's kind of it in crude. And I don't really have anything else to say because crude has been, it's been a long trade. And that's all there is to it. And so what I'm going to do is I'm going to flip the script here a little bit too. And I'm not really going to talk about soybeans because the price action in soybeans kind of sucks. There is a nice spot down here at about 13.24. I'm not sure we get there. We do have a crop report coming out tomorrow. I think it's tomorrow. It might be today. It might even be today. It's not showing up on the calendar though. It's not even showing up on any calendar. I don't know if it's today or is it Friday. Would it even make this? I don't even know if it would make this. I don't even know if it would make the economic calendar on TradingView. I think it might be today. It's either today or tomorrow. I'll take a look. Take a look. You can go to WASDE, WASDE.com. I'm not going to do it. I'm pretty much going to sit on the sidelines. And that's why, because we have the crop report coming out. I don't want to really be involved in anything. Now, there might be plenty of stuff that I'll do after the fact. We have a number of levels set here. I have an R3 at 1385. That's a big move for soybeans if we get up there. And also another one at 1405. And that's on the 4-hour. I'm going to flip the script a little bit here, and I'm going to move into a natural gas. Natural gas has been quietly, and I say this quietly, I mean, look, it's really since about last year, right? Early or late last year, natural gas has just been on its ass. I mean, this was just a mammoth of a move from up in the 750 area all the way down into like I think the low here was like 190 something. Massive move in natural gas, huge contract. Like I don't trade natural gas futures because, I just don't. I'm just not a big enough fish to play in that pond, but I do options in natural gas, and I will do the UNG and play natural gas that way. I'll play the XLE and the XOP because they have exposure to natural gas. But again, with that being said, I think natural gas here short term is looking very interestingly bullish to me. And I'm going to continue to just kind of dip my toe in this market and accumulate here. I think natural gas is kind of on the verge of busting through. And when it does, in fact, bust through about $3, I'm just going to throw this alert up here. I'm not going to put it, do any, but it's really more of a like, hey, look, natural gas is ready. If it can get up over $3, folks, I think natural gas may kind of explode here. I think it may explode. And I don't mean explode, but I think it may actually have enough momentum then to kind of get back into that higher 4 number, or that lower 4 number, and then really kind of get going here as we get into the winter months. So anyway, just kind of looking at that, it is on the radar. You can see here clearly on the 1 hour that we have a pretty nicely trending market to the upside, right? Very, to me, very orderly rally. It has had its moments where it's kind of had a few kind of blow-offs here where it may have gotten ahead of itself, but, very quietly rallying to the upside. So I do think it's an interesting trade. I am going to pull up my other account, wherever the hell it went. I hate this sometimes. There we go. Um, what happened to this? Okay. Um, I'm going to look at the UNG and just a little basic stuff here, folks. Nothing really crazy. UNG going to stay away from the weeklies. Going to do a little October here. And the nice thing about the UNG, it's cheap. It's cheap. And I'm just going to buy some calls. I'm going to buy some calls. And that's it. That's all there is to it. And I'm going to buy some at the money calls. Probably either the 7s or the 8s. Most likely the 7s or even the 6s. And just do these little small call spreads. Stuff like this. Like a 6-8. Or a 7-9. $2 wides are nice because they're cheap. They're 50-50 shots. And if natural gas kind of gets a pop here, these things will actually come in pretty nicely. And that's it. That's all I have to say about natural gas. There's really nothing more creative I can do with it. There's no volatility in here. You could try doing a calendar spread. They don't have the options. They have not released or done. I'm surprised there's no December options in here. They were right out to January. So I would assume they're going to add strikes. This is a pretty liquid ETF. You can see the numbers in here as far as the open interest. So you're not getting into something that's illiquid. And that's kind of the story there on natural gas. And that kind of sums up futures overall with what I'm doing. And we're on 31 minutes. Now, as far as stocks, there's really not much in my wheelhouse right now. I'm obviously going to be watching Oracle again today because they had such a big sell-off yesterday. And then as far as anything else, I might take a look at Apple. Doesn't seem like the market was very impressed with their phone 38, whatever one's out. What is it, 15? Who knows? Who cares? So, I don't know. I don't really know if there's going to be much in the stock angle, and to be interested in much of anything. Because again, volatility sucks. Let me look at earnings real quick just to see if there's anything interesting in earnings. I see FedEx. Does FedEx come up? Let me see. FedEx comes up. Yeah, FedEx is a while away, so I'm not really that's on the 20th. We still got time for that. I'm really not interested in many of these, like Adobe. As much as they're interesting, these aren't very liquid to do. Like Adobe always kind of sucks doing earnings trades because there's no liquidity in it. And if I was going to do anything, I'll just pop it up here just for argument's sake. It's a $500 stock. And you would think with a $500 stock, there would be massive open interest on both sides, seeing that, hey, look, since I can't really afford to buy the stock or trade the stock, that I would trade the options. They're just not there. There's literally you could see almost anything within the expected move, $45 here. There's not one contract on either side, puts or calls. The 600 calls have a 1,000 open interest. That's the biggest one. So that kind of seems to be where the money's landing a little bit here on Adobe, is up on these 600 calls. But to me, that's kind of a ridiculous trade because unless you're selling those calls, I don't really see any reason to do anything with it. And so what it looks to me is that someone has a 470, right? You see how you can see where the footprints are? I always talk about, look for those elephant prints. Here's an elephant print right here. Someone obviously has probably it might be more than one person, but I can guarantee it's probably just one person, has a pretty big strangle on. They're probably selling the 470, 600 strangle here for earnings, right? More than one standard deviation away. And they're right on the bubble on the upside. It's giving you about 8 negative deltas. Really nice theta on this. Problem with this trade, though, and right as far as my account, look at the margin, right? You need $48,000 worth of margin to do this. So like you can't. So this is not some small fish doing this. This is kind of a whale who's doing this trade. To be able to, and again, I'm just extrapolating and interpreting that this is what the trade is. I believe it is. I highly doubt that there's just that much open interest on those two strikes alone. I mean, it's significantly different from all the others. It has to be the trade. And I highly doubt anyone, right? Most traders are not going to pay $950 to be in that trade. It's just not, right? Like from a trader's point of view, you're not going to pay $950 to be in that trade. So you're selling this. Now, as far as risk reward, that's really it's a pretty nice trade structurally, like, right, 78% probability of profit, which brings me to like, all right, so if I was going to do this, and this is, I think this is tomorrow before the bell, so I'd have to do this tonight. If you're really going to do this in a retail account, you have to do a Iron Condor. You're not doing this, you're not putting up $48,000 worth of margin to do this trade. Like, I mean, you'd be nuts to do that. I mean, even in my big account, I could probably do it. I think it would probably be less than that. This is my small trading account. I'm sure if I did it in my bigger account, I think the margin probably be cut in half. But this is kind of nuts. You have to do an Iron Condor. So let's try doing a 10 wide strangle because that will give you the biggest. The 10 wide Iron Condor is more stranglesque. And the reason is because the theta is higher. You're going to put up more capital. But again, you're still in the 73% probability of profit. Let's put this one up on the curve. This is actually a nice trade. This is a really nice looking trade for earnings. 73% probability of profit, right? You're basically delta neutral, a little skewed bearish, right? Negative delta. But for the most part, it's basically delta neutral. Theta is not bad. A 5 theta on an Iron Condor is pretty darn good. Max profit is 224, and then your max loss is 800. So you're using about $800 worth of buying power as opposed to 40,000. And then to bring in $224 of premium is actually a good, right? It's usually around 1/3 is about where I like to sit. And so structurally, this trade is actually, right in the wheelhouse of something I would do. And then obviously, if you don't want to put up that much capital, just shorten the strike. So instead of a 600, 610, do a 600, 605. And set 470, 460, do a 470, 465. Again, this is a very attractive trade. You're still in the 70s. And this one, you're only using $300 worth of capital. And you're still getting a pretty decent theta on this. But I will, full disclosure with either one of these Iron Condors, they are going to come in a hell of a lot slower than would a strangle, right? As far as like getting that collapse, the strangle is the way to go. If you're looking for that immediate collapse, that's the way it works. That's the way it works. So depending on what your capital requirements are, you kind of have 3 trades here. You're either going to do the 600, 470 strangle. You're going to do 600, 610, 470, 460 Iron Condor. If you want to take a little more risk on, use a little more capital, get a little more reward, or the pure Iron Condor of 470, 465, 600, 605, and use the least amount of capital. Any one of those will do. And again, you're going to need to put this one on before the close tonight. Before the close. All right. And so more than likely, if I do any of these, they'll be posted up on the trade archive. So any of those will be fine. And then as far as the other ones, I have no interest in Lennar. Honestly, I really have no interest in Lennar at all. Like, bleh, meh. No, never really a good one to trade for earnings. And Copart, no interest whatsoever. And there's Lennar A and B, but I could care less. I don't care. So really the only one worthwhile right now is Adobe. It is Adobe. And so there you go. And I gave you three things. So that's it. And that's all I got. And so we'll see what happens with these numbers coming out at 8:30. You could see we're pretty much chopping and slopping at this point. And I think that's going to be kind of the case until these numbers come out and digest themselves. So have a good one. Again, 3 days in a row, we're rocking, and have a good one. Again, if you want to, I post all my trades up in the Discord every day. I don't communicate much in there. It's pretty quiet lately. I'm not much of a communicator, but I post all my trades up there for anyone and anybody to go look at them and do whatever you want. So have a nice day, and good luck.